Hey traders, Cousin Benny coming to you on April the 7th with a look at the markets and a quick watch list for what I'm looking at coming into this week. And futures are currently up 1548.45, so it's a nice start. Looking at the S&P 500 again. Remember, we have been talking over the last, this is a weekly chart, over the last few weeks about the fact we got up over 70 on the RSI and that we did the same back in 2011. And you have to keep that in mind, being we're back up at highs that we saw in 2007, which were 1576.09, I believe, were the highs. So it's possible we could still test that level before we turn down, if we turn down at all. The main reason why I have this chart up is this is obviously the low in 2009 in March, and this is the green line is the US dollar. As we continue to ease, we rallied, obviously, and the Fed began to ease again, and you can see the green line denotes the same. But you started to see the US dollar trending higher over the last few weeks, and that's mainly because the Bank of Japan has been easing faster than the Fed could ease, and Bernanke's been talking about that. He and the Feds were looking at reducing the amount of mortgage-backed securities they were purchasing. So they're thinking about getting out of the easing out of the easing over the next few years, depending on unemployment data, among other things. But the reason why I brought up this chart is I want to show you the Japanese markets. The Nikkei, which contrasted with this, and the yen, you can see what happened. The green is the yen and the red is the Nikkei. You can see as the Bank of Japan began easing and we got this weakness in the yen, the Nikkei rallied. So as long as they continue to do this, which they've been talking about over the last few weeks, that they're going to continue to do this. They have a new government, and they're all about easing. Okay, so printing the yen will make their products cheaper, and therefore the markets are rallying around that news. So if you're interested in trading the Nikkei, that's why stocks in that group are rallying. Looking over at Europe, we can see this is the European top 100 index, the top 100 stocks. The trend that we broke on Friday, the 200 period here, is continuing to cruise higher. We got a little test here, and we continue to rally. Since we've broken this trend line, I would venture to say that we're probably going to come down and test the 200 period at some point in time. If we look at the ACWI, this is the All Country World Index, and it's the best of all the stocks around the world. This same trend line that we've been in, this uptrend we've been in, has been held up by the 50 period, the blue line, and the 200 period down here. You can see the volume that we saw on Friday. That was fairly significant. It was above average, and there was a distribution day. But we did manage to close right around the 50 period. So let's watch what happens with this during the week for the overall all country world index. With the strong dollar, one would suspect that we'd see this sort of downtrend in the gold shares. So this is the dollar here rallying higher, again because of the yen weakness and the easing by the Bank of Japan. And gold has continued to move lower. However, we've seen this level before. So this is a very important level, right around 150, which I believe GTO was mentioning in the room. But we've seen this level 3 times now, and it's a very good possibility that we either break down through this level if the dollar continues to move higher and the yen moves lower, or we could bounce here if we get a respite on the dollar yen pair and we see a reversal of the current trend. So keep an eye on gold and commodities in general. This is a chart of ACC, the iShares Barclays Aggregate Bond Fund. Bonds prices jumped as in a flight to safety last week. As we can see by the break of this downtrend, the yellow line is the AGG to the SPX. Okay, so the bond stock ratio, basically. Very similar to GTO's 7-10-year bond stock ratio, which he covers. With this particular AGG, this includes investment grade corporates, treasuries, and mortgage-backed securities as a group. So GTO's covers the 7-10-year bond. But we can see how we rallied quite substantially off of that Wednesday level here. So the bottom line is rising bond prices and falling yields are consistent with a start market correction. So keep an eye on this. Let's take a look at TLT, which I already know what the chart looks like. GTO got in this on Wednesday. I'm not sure what the setup was. I can see a few things here, but for the most part, I had a really nice rally here from the 118.50 level up to 123 on Friday. Again, with commodities, we can see that copper has been really weak. If you draw a trend line here, you can see we're at the lower part of that trend line and we're oversold. So depending on what happens with the dollar, we could see continued further weakness if the dollar continues to rally, or if the dollar has a respite, we could see this move back up, maybe test this breakdown here at $3.40. Alright, so if you're bullish stocks, you want to see this moving higher, not lower. This is a chart of DBV, the Currency Harvest Fund. Basically, this is a reflection of the carry trade. If this continues to move higher, that's bullish for stocks. If it moves lower, that's bearish for stocks. You want to watch this. We got up over 70 on the RSI. If this doesn't get back above 70, this could be considered a bearish failure swing, and we could see weakness on the DBV. Taking a quick peek at currencies, Euro US dollar had a nice rally off of these lows that we put in November 2012. We have this upper trend line that we could conceivably test. If not, we have the MAs right above us, so that's something to consider as well. The Aussie Japanese yen, all the yen pairs were doing quite well last week, obviously because of the yen weakness. We have this upper trend line, which is very close to the 1618 extension that we took from this low up to this high when we were moving sideways and finally broke above, so I didn't move this fib level here. Okay. So if I move this over, you can see where we are. The 127 extension here, we had some resistance, and then now we're moving up into this channel a little higher. We could test this channel and move lower, or we could break through this and hit the 1618 extension if the yen continues to weaken. US dollar to yen pair, we can see where we broke above this level, obviously, and if we draw a fib in here from these lows up to this high, right in here, we're right at the 127 extension. If we pull this down a little bit, you can see the 1618 is up here at 103, 104, right around 104 on the US dollar Japanese yen. So looking at the sectors, we can see where we had quite a nice rally on the IYR. The real estate shares did well. We pointed out Vornado on Wednesday, which had a really nice rally, and a lot of REITs were doing well as also last week. IYT was pointed out by ACPG. I was following a few of the airlines as well as a few of the trucking stocks and took a trade on LUV on the strength of the IYT and this hammer that we put in. We got back above the 50 period. You can see the other sectors. XLU in particular is really strong. and what the other ones are doing. So you can pause this and get an idea of what the sectors are doing. Look for stocks in these sectors that are showing relative strength to the S&P or relative weakness if you're thinking about shorting. This is what I always do when I look at this sector candle glance. This is Southwest Airlines, which I entered on Friday, a quarter position. We can look at the 5-minute. Let's do it here. This is the hourly chart with pivots overlaid and resistance levels. We had a nice rally off of these lows when we saw that hammer on AUDJPY, so I started looking at a few different positions. GMT was another GATX Corp, which is a component of IYT. I saw this hammering off of the rising 50 exponential moving average, so I decided to take a shot at this one. Also considering that there was support here, previous support in this area. We also have Bollinger Bands at that level. So there was a confluence of a few things that I was looking at that got me into GMT aside from the bounce and the IYT as well. Looking at stocks going forward into the week, I'm watching cores. And if you look at my stock Twitch channel, you can check out all the trades that I posted over the weekend. Cadence Pharmaceuticals was one. We have a box here, basically a flag, and a break out of this box to the higher will be a long for me, or breakdown will be a short down to this rising moving average here, the 20 period. Now let's keep an eye on how these reset, these pivot points. Let's take a look at how these pivots reset on Monday. Medical Properties Trust, MPW. I think this is one a Heart Pumper mentioned to me. In a nice uptrend, note the Ichimoku Kumo is moving higher, and we just continue to cruise higher on this particular one. Gulfport Energy, GPOR. I'm watching this range here, the sideways 8-day box basically, or flag. I'm looking for a break higher for a long and a breakdown for a short. I don't think I'm going to be short in this one, but I am looking for a breakout to the upside on Monday. CIMIX or CX, again, this is another trade along with USG, which Trader Stewie brought out to our attention. We got into USG and made a point, I think $1.05 on it by the end of the day, and got completely out of that. I'd look for this to break out to the upside with the strength in the materials sector components, CX and USG for continuations higher. What I'd like to see is this level here and this level here. You can see the volume. I'd like to see a break above that level on higher volume than this candle and this candle. Cadence Pharmaceuticals, SNTA, has a really nice trend break here. We have Kumo just overhead. If this breaks through Kumo, it could be very interesting. If you're interested in scalping this, I would probably check the 5-minute R1 30-minute opening range setup. If you don't know what that is, you can always go to my site and check that at theclosingprint.com, and just click here on the 30-minute opening range, and that'll bring you to a page which explains the 30-minute opening range, as well as gives you some options for a video here and some descriptions of the trade itself, how this works, the strategy, and so forth. You can also check the strategies at the bottom here, tutorials, and this page comes up. There's a number of tutorials here on trading the opening range, trading gaps, and the Indy setup, which is something HCPG, High Chart Patterns Group, coined this phrase. Putting the two of these together to create a nice strategy trade using the 5-minute and your pivots. Okay, so just click on this video here to follow that. It's also on YouTube as well. I'll be watching OWW Orbits, which is put in a nice flag, 2-week flag here, and we continue to break out on Thursday and Friday from this level here at 5.99. It's a cheap stock, but something to keep an eye on as we get into summer and people start using going on vacation. Alright, so that's going to do it for me. I hope this helps. This is Cousin Vinny coming to you from the Closing Print and Day Trader Boot, where you can come and check out a 2-week free trial and come and meet some of the traders in the room. Okay, again, I hope this helps.